Hi everybody, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Well, last week we saw that the FANGs were offering 3 additional buy signals, and that was in addition to the recent buy signal on Amazon, which has rebounded up off a 10-year low. After doing very little for most of this year, those FANG stocks, which have not been in what I call my phantom FANG portfolio, may be about to play some catch-up. Now, I confess that I got so excited about adding not 1, not 2, but 3 stocks at the same time that I completely overlooked something that is far more profound. And that is the implications for the overall stock market. Now, I hear someone saying, but Ross, how can 3 stocks, even 3 FANG stocks, have any implications for the overall market? Well, give me a moment to review the FANGs, and then I'll get to it. I think you will be as intrigued as I am. But before we take a close look at those FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with the stocks that were in the Phantom FANG portfolio. Microsoft, well, what can we say about Microsoft? It's there. It's been sort of shuffling sideways recently, but fundamentally it looks pretty much as if it's on track to maybe get to its HB3, okay, which would be 16 times book value. Facebook, well, look at Facebook, eh? It hit its bubble price at 7.4 times book value once, twice, 3 times, and it looks like it's trying it again. But look at what's happening to the earnings and the fair market value. They actually are accelerating. And so if something interesting happens to the market, it could well be that Facebook could break higher as well. The last Phantom FANG that was in our portfolio is Amazon, and a couple of weeks ago I said, look, this stock has reached a 10-year valuation low at its HB2, okay, and that is 12 times book value. And, well, I think it should be moving higher, and indeed it has moved higher by about 10% in that period. Now, the stocks that are going in as of last week, the first one is Netflix. And look at Netflix breaking out over its HB3. Now, as you know, I have not cared very much for Netflix, but listen, you don't necessarily pay me to like or dislike a stock. What you do is you pay me to analyze what SVA is saying. And what SVA is saying about Netflix is that it's breaking out over its HB3. And that, of course, would set a target of $732 for its upside. That's a nice gain from here. Apple is a little more difficult to read in one sense. Okay, that is to say, it doesn't look as really doing very much of anything from an SVA point of view. Now, if I kind of do a technical analysis trend line here, I see that there's a platform being formed and the stock is broken out from there. But from an SVA point of view, so what? Well, here's the so what. Here is the trend of the balance sheet. And there, of course, was the last balance sheet. Since that time, of course, we don't know what the balance sheet is. And therefore, we default to the natural growth of the book value of the company by itself. And of course, that is moving up. But if the company is, as we suspect, continuing to buy back stock, and they bought back a lot of stock in the last quarter, then if we follow that trend line down, what we see is that it looks very much as if the stock has actually hit its HB6, that's heavens, 33 times book value, and looks like it's breaking out. And I think that that is likely to be the case. Alphabet, well, you know how much I've loved Alphabet, and Alphabet has had not only a superb move from its super growth price to its bubble price, but it's given us 2 or 3 really, really nice trades in between. But now it's reached its bubble price, and now the question is, what next? Well, from a long historical point of view, what we see is that the stock has got back up to where it used to be years and years ago. Now, in between that time, there has been a nice steady increase in the earnings and the fair market value, but very recently that has accelerated on the upside, and it's moved the price of the stock up to its bubble price as well. It looks very much to me as if that stock is breaking out as well. And if I look at the close-in chart, I can see that it actually is trying to do so. And indeed, if the overall market is trying to do that and the other FANGs are there, I suspect that Alphabet is going to follow as well. The only stock that hasn't really given us much of a heads up or heads down one way or another is NVIDIA, which after breaking out over its HB4, which is 20 times book value, the stock has steadfastly refused to give us any kinds of useful trading signals at all. So for the time being, I'm sort of putting NVIDIA aside. Again, as you will remember, I showed you what the rest of the industry actually looks like, and NVIDIA still kind of makes me a little nervous. Now, in summary, our Phantom FANG portfolio now has 6 stocks in it. Microsoft, Facebook, and Amazon were already there and have now been joined as of last week by Netflix, Apple, and Alphabet. That would mean that every FANG stock, but maybe one, is in an uptrend. And that's a big, fat and leading the overall market higher. So, Russ, you say, what's the big deal? Well, here's the big deal. You'll recall clearly that I had noted that as far as the overall market is concerned, our upside target, the low super growth price for the Standard & Poor's 500, which is 4.5 times book value, remains intact. And that's about 14% higher than today. We are bullish, and we plan to stay fully invested. As I keep saying, our parachute is still safely tucked away. But I have not mentioned a word about what's going on in the NASDAQ 100 for some time, and this is where things get really interesting. Currently, the NASDAQ 100 is 3% short of its next upside target breakpoint, its HB1 price, or roughly 10 times adjusted book. Now, the FANGs not only lead the Standard & Poor's, but they also lead the NASDAQ as well. If the FANGs are all breaking out, the NASDAQ is certain to follow. A breakout in the NASDAQ 100 would imply a potential move to its HB2 price, or 12 times book, which is 28% higher than its HB1 price. That just happens to be double, a mere double of the upside potential of the Standard & Poor's 500, which is a bit over 14%. In other words, given that the NASDAQ has a beta of roughly 2-ish relative to the Standard & Poor's 500, then growth stocks in general, and the FANGs in particular, could have a potential upside of nearly twice the broad market. In other words, bullish barely begins to describe how the market looks with all those FANGs breaking out, and if the NASDAQ breaks out with them. I don't know how all of your stocks look, but the FANGs look very interesting indeed. And of course, While we're on the subject, if you'd like to see how your own stocks are shaping up, then send us an email at info@strategicanalysis.ca. And by the way, how expensive is our service? Well, if your biggest holding declined by 20%, how much would you lose? And what would you be willing to pay to avoid that loss? Our annual fees are cheaper than that by a huge fraction, and they're tax deductible. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.